Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Friday, June 28th, 2024. But before we check out the charts, I just want to ask you to please click like, share, subscribe, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the daily Tesla and daily NVIDIA reports, daily analysis in the SPY, daily analysis in the Triple Q, weekly analysis in the S&P 500 index, the NASDAQ 100 index, and Apple stock, as well as two individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near term investor, always looking for 20% moves or more on those underlying stocks. And you get to see all of this for free. We offer a 5-day free trial up front. So check out wickedstocks.com. Let's take a look at the charts. I will start with this one, just once again to stress and underscore the fact that the one-year bear trend, despite recent gains the market has made over the last week or so, still remains in a longer-term bear market below 212 even. And by longer term, I'm talking the one-year channel structure. That is considered a sell opportunity if tested over the next week or so, and it very well may be. I'll give you the indication for that in a moment. And once tested, we can fall back really through the rest of the year, because from here we could fall to channel support that is presently in the 110s and dropping. So that is really what I see at play. Am I expecting the market to fall into the low 100s following with a testing of 212 even? No, but I think you can play that. In other words, I think it's attainable. We would then have meaningful confirmational, if you will, sell signals on the way down that would clarify the low 110s as a clear-cut objective. But you can play that because odds would favor, by a degree, a meaningful bearish rotation as we move through the rest of the year. On the other hand, if we were to close today, the week itself, and I don't see this happening, but we certainly could perhaps by the end of next week settle above the 212 even formation. And if by a 1% margin, this week's number is 214.12, if we settled at 214.12 or higher today, this 325.94 longer term channel top then considered a realistic 3 to 5 month target. So closing above the 212 even formation by a 1% degree would indicate a continued recovery, a good low for the year, and continued recovery through the rest of the year. So it's the flip side of selling 212 even. It is your pivot point through the rest of the year. Now for the daily chart, and remember this 212 even formation is in the 210 area on the daily chart, 210.72. We have had a short-term buy signal just a couple of days ago, Wednesday, above 187.44 that anticipated, among other things, the 200.11 3/8 Fibonacci. I've been mentioning how the buy signals should be considered stair-step, 3 to 5 day swing trades on the way up to 210.72. In other words, I don't expect to see the 210.72 one-year channel top unless we were to close today above 200.11. 200.11 is preceded by a respectable channel top in its own right at 198.19. So you can see to the far right here, I have 198.19 to 200.11, nearly 2 full points wide, that can absorb buying through next week. From here, we can fall back. Well, it's not so much 187.44, it's 183.79. So holding below 198.19. If you went short over the last day or two from this area, you're holding out 3 to 5 day swing traders for 183.79. And 2 to 3 week swing traders, you're holding out for 167.37. It's about as simple as that. So having gone short, or if you're willing to go short, if there's something you're inclined to do, play the short side here, in the 198.19 to 200.11 region, you're holding out by some point next week for 183.79, and by some point over the next 2 to 3 weeks for 167.37, which we don't even show in the support resistance area. I will say, and I'm not expecting this today, that if over the next few days we do close below 183.79, this is probably just a 3 to 5 day swing trade south to 167.37. But I say 2 to 3 weeks because that allows 183.79 to hold selling pressures for at least a day, possibly several, before the market then gives way, presumably, to 167.37. So holding below 198.19 to 200.11, I am expecting 167.37 over the next 2 to 3 weeks. And were we to close below 167.37 over the next several weeks, then I think that is your go with sell signal as we move into July, August, September trade. The following couple of months, 2 to 3 months at the most, then likely to yield this 113.63 longer term channel bottom. It is this channel bottom that I consider to be a longer term possibility anyway, so long as we're unable to close above 212 even. And by that I mean over the next 2 to 3 to 5 months. Let's talk upside one more time. I do want to say that if we push today through 200.11, 207.30 is likely. That is an intraday resistance that may well capture remnant buying pressures into the closing bell. But if we do settle today above 200.11, that 212 even channel top is then expected by the end of next week, within about 3 to 5 days. And that'll be a lower number, of course, next week. Once again, able to contain buying through July, even through the third quarter. And from here, we can fall away the following 2 to 3 to 5 months. But if we were to close next week, Friday, above the 212 even formation by a 1% margin, no good reason to be short Tesla, in my opinion, as we continue into later year, the following 3 to 5 months, then in reach of this 325.94 channel top. This is where I get bullish Tesla into later year. Until then, I'm going to keep this sort of bearish drumbeat going below 212 even, because this market's susceptible to failing in the 210s, not only on a weekly basis but even on a quarterly basis. I think I've pretty much said it all. I'm going to leave you with this image. This is a solid image for the day. I will say, and I don't see this actually, I was just about to say that if we open above 200.11, we just might reach 210.72 today. And no, I think this channel top at 207.30 is strong enough to contain buying pressures for the balance of the day. But if we close above 200.11, no good reason to be short Tesla. If your time horizon is 3 to 5 days out, we are then anticipating the significant 210.72 formation, where if you're long, whether that's recently or long following a settlement today above 200.11, profits can and probably should be taken, at least some. And yes, if we close above 210.72, hold on for the rest. Hold on to the rest of whatever you have, because we would then expect a meaningful bullish continuation into the 320s over the following 3 to 5 months. Please click like, share, subscribe. Check out wickedstocks.com. We actually put out a stock pick today. That is Thursday. I always record these a day in advance. So on Thursday, we put out a stock pick on AMD. You may be interested in that. It is right at the edge of an important pivot point. I'm not going to get too deep into that, but you might want to check it out, and you can see it for free. You got a 5-day free trial at wickedstocks.com. You can also see our daily and triple Q and SPY analysis, last week's stock picks, and those micro stocks, so forth and so on. I'm going to leave it at that. Please click like, share, subscribe. I'll be back Sunday afternoon with Monday's Tesla report, and you have a great weekend.